There may be new leadership at Citigroup, but the outlook for the stock remains the same. That's the opinion of Standard & Poor's Erik, who's maintaining his buy recommendation on Citi shares. Erik, in your view, why is the stock today just as much of a buy as it was yesterday?
Well, we think that they're going in the right direction. They're improving their profit margins. Their capital levels are better than peers. And if you're interested in having international exposure, international lending, Citigroup is the vehicle by which to do it. And we think that shares are attractive on earnings and on book value.
So Vikram Pandit is out, Michael Corbat is in. What changes do you expect from him? What are, for instance, the top 2 or 3 things that he should be doing as the CEO now?
Well, number one is shrink the assets to something that's more manageable. Keep cutting down the Citi holdings, legacy assets, and get the balance sheet to something they can get their arms around. Then, number two, return of capital to shareholders. Citigroup pays a penny per quarter. This March, the Federal Reserve stress tests will be coming out again, and it is widely expected, including by us, that Citigroup will be in a position to raise its dividend and buy back some shares.
Do you think at this point we'll see a further shakeup in any of the executive ranks at Citi?
I'm sure as the new CEO comes in that there'll be some changes made, likely in the division that he came from, and maybe in trading, something like that, sure.
You were mentioning international lending being a priority. Given Corbat's background, Citi might be able to expand further on that, right?
Sure. Citi is in a very good position to grow commercial lending globally. And if the world economy continues to heal and China avoids recession and Greece and Spain and Italy and everything improves, then Citigroup is in a good situation.
When you were saying the top priorities include getting rid of some assets, shredding assets, in an extreme case, could that include a breakup of the company, which some critics have called for a while, or a sale?
Well, if it didn't happen in March of 2009, the chances of it happening now are quite slim. I wouldn't go that far. I think that what they're doing right now, which is shrinking the legacy assets, which is called Citi Holdings, that's about 9% of assets. We'd like to see that go to 0. And then perhaps rationalizing some of the other things that they have, then Citigroup would be in a much better place.
What kind of pay do you think Corbat could or would accept? There's talk, of course, that one reason Pandit is not there is that there possibly could have been a resignation over a pay dispute.
Sure. Well, Pandit is not exactly underpaid. He made $14 million in compensation in 2011, which includes $8 million from stock options and $6 million from cash and bonus. He's in about the same league as Jamie Dimon, and in terms of cash compensation for salary, he's just below Mr. Stumpf at Wells Fargo. We don't consider Mr. Pandit underpaid.
So what about Corbat? Do you think that the pay would be equal? I mean, what is the proper pay right now?
Well, the proper pay in terms of what our peers paying is about $1 million a year salary, and perhaps a bonus in the range of $1 to $2 million. Most CEOs for large U.S. banks do not get bonuses. Only J.P. Morgan and Citigroup pay bonuses. Salary is about $1 million. Wells Fargo pays their CEO nearly $3 million. We think an appropriate range would be just under $1 million, which is what Brian Moynihan gets at Bank of America.
And finally, Erik, what would you describe as Pandit's lasting legacy?
Turning around Citigroup, making sure it survives, avoiding it being broken up by the Obama administration in March of 2009, and just reassuring shareholders that this is something that is going to survive. It's no longer a zombie bank, and he should get some credit for that.
But the stock might perform better under Corbat if we look at 4 years from now than it did after a very tumultuous period?
Yeah, sure. I mean, Citigroup will continue on in its positive trajectory. It'll continue doing the things that it's doing well. and we expect further share price improvements, and we have a $42 target price.
S&P Capital IQ's Erik Great to talk to you. Thanks, Erik.
Thank you.
I'm Rhonda Schaffler. This is Reuters.